Looking for royalty-free music? Discover Epidemic Sound. Find the perfect track for all of your content in minutes, with more than 35,000 tracks and 90,000 sound effects. Start your 30-day free trial today.
$453,000 in affiliate commissions in 60 days without Amazon, Shopify, or Facebook. Is it possible? Absolutely, and I'm about to prove it to you. I'm going to log into my affiliate account here in just a moment to show you these incredible results, but first a couple things. Really important thing number one. If you're not into digital marketing or entrepreneurship in any way, please hit the skip button below. Google charges me if you don't hit that skip button, so please go ahead and click it if you're not interested.
Yeah, boy! Good morning. Hey, let me remind you that trading is risky and not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But pretty please, would you stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose? Would you do that, please? Pretty please. Hey. Yo, what's up? Hey, my name is Wayne. Welcome to my office here in Atlanta, Georgia. Today we're going to conduct technical and fundamental analysis with the overriding goal of putting together trade plans. Yes, yesterday we talked about why the Fed cannot address inflation if it's supply side shifting of the curve. We also talked about what the reverse repo market is. What a strange day. Today, maybe we just go through the dollar pairs and the yen pairs, and that's that. We can look at gold, oil, and Bitcoin as well. Ultimately, I'll leave it to you. You're the boss. I'm a humble currency trader and analyst. I've only been doing this for roughly 20 years. So if I can help you put together trade plans, that'd be great. I'll do my best to do that. So thank you for your positive energy. Thank you for your good questions. Thank you for being here. Thank you for being a subscriber. If you're not a subscriber, click the subscribe button. Why? Why would you do this? What's in it for you? Oh, well, when I hit a live stream, you're notified. So you are welcomed right into my home office. Cool. You're like, Wayne, you still work out of your home? Hey, look, I used to have a big office up in a big skyscraper in a beautiful LEED certified building. But, I got kids. So I'm like, hey, you know what? I'm going to work at home. Be around when my kids are alive and still love me, right? Imagine that. You're like, hey, what's the benefit of trading Forex? Oh, you make a lot of money. Oh, it's intellectually stimulating. Dude, I know who my children are because I'm here and I don't spend 2.5 hours a day commuting. So maybe that's the major benefit. So anyways, whatever. I like being a currency trader. And the rest is just being facetious. So whatever. Ask questions, get involved. And thank you for everything that you do. I'd like to thank Traders Way for being part of our community as well. You're a trader. Maybe you're brand new and you're like, hey, I need to practice. Where do I go for that? You're like, hey, why don't you go to Traders Way and open up a demo account? I recommend the MT4 variable or VAR account. You can have MT5 ECN if you want. It's all good, whatever you want. The thing is, eventually you're going to have to trust a broker. So anyways, Traders Way has earned my loyalty, my respect, and my trust. And so if you need a recommendation from me, I'm like, hey, tradersway.com. Oh, and you're like, what are major selling points? Oh, well, fast execution speed, competitive fees, huge swaps, world-class customer service, and above average good-looking people. Cool. So welcome. What do we have here? Dollar's still strong. Cool. A little yen giving up a bit. Fine. That's all right. Swissy. Interesting, huh? Interesting. And that's what the Swiss National Bank wants. And somebody asked me about intervention the other day, and I'm like, I think I just kind of threw out the question. But I think what they were really asking is about Swiss franc. And yeah, maybe I should pay a little more attention to that. Okay? Being a macro trader, that's a relative strength issue. And I've played that game before, and I played it against Swiss franc, and it ended ugly for everybody. So I kind of, you know what I missed? I missed the days of, New Zealand intervention. Those were the good days. And the funny thing about intervention is it's never worked. So keep that in mind. Anyways, pound's still strong. As we know, Bank of England is a lot more hawkish than they used to be. Good. Australia, didn't we just talk about Australia yesterday? And you're like, oh, but iron ore import or exports to Australia are only up 150%. But, other steel-related products are up 650%. But that's it. Only that much. Seems like a lot to me. So anyways, Aussie's recovering and New Zealand enjoying the benefits of being in the APAC. Cool. Nice. So let's start with commodities. Okay. We'll start with commodities here. WTI, my oh my. Oh, I just killed it. Bring it back. bring it back to me. All right, so this is a daily chart, and as you can see, I've already highlighted it yesterday of this being key support. And we're kind of at this area like, are you going to be a buyer between now and the end of the year? Are you playing sort of, I don't know, thin markets? Like, what is it that you want to do? Some might be targeting this, some might be targeting this, some might be targeting a bottom, right? And they're all fine. It's all fine. It just, how do you thread together your trade plan? Well, on a small time frame, you could be playing this, or you could kind of wait for the next period and try to play that, or let it see if it breaches. But if you're like a buyer of a dip, you're kind of playing the double bottom first and then the 1, 2, 3. The second part is if you're a bear, this is where the sell occurs. Okay? That's where the sell occurs. So, anyways, be careful. Let's dive in a little deeper on this and look on the 15 and go back to yesterday. Were there opportunities for you to buy this even on a 15-minute chart? Okay. Would you call that a double or triple bottom? Okay. Then what? Higher high. Then what? Higher low. And we call this a hammock. Hammock, is that how you spell it? Anyways, that's a K, by the way. You're like, what's that one C? I'm not going to explain why we call it a hammock, but it's from old training that I did a long time ago. And the point of the training and the point of this secret word is that this is such a common pattern that there's a cool name for it. That's all. And that this isn't just random, it's a basis of trading. And the other part of it is not only is it a normal part of, let's say, standard technical analysis, but the other point of that training was it could be the only thing you do. Okay? How many people here know or have gone through the training in which we call this hammock? Like, you know this. You're like, ah ha ha ha, oui, that is a hammock. Anybody? Yeah, Kevin, I already got you taken care of. Kevin's like, hey, Wayne, check your email. I already got you taken care of, KG. Why don't you check your email? Cool. Okay, so anyways. Yeah, hey, my pleasure, buddy. My pleasure. Okay. The rest is just simple price action. Okay, and now your concern is, what are we going to do today? Okay, that's all. Go through a whole new cycle. That's great. That's fine. Timing is an issue. There's a pretty reasonable reasoning behind bear shorting. And I already showed you on a daily chart, this is clearly a sell zone up here. Clearly. Okay? So now it's just like, how many sellers are there? Dude, I don't know. So for a bull, there's basically what you're trying to do is say, well, there's a daily pullback, and then there's a daily double bottom. So I would call these like maybe plan A's and plan B's. Okay? You got it? Now, if you have been a subscriber of Forex.Today for a long time, I've taught you on several occasions the right time of day to be trading oil. And that's right around in here. Cool. So it'd be interesting if you get like a fast draw down today and then a new buildup. I'm not making that call. It's just like, sit down, do your job. Okay, just sit down and do your job. Whatever, man. Okay? So I would watch this area like I just drew on a different time frame. I would watch this area. And if I was a bull, I would look for this, or I'd look for the opposite one, the lower one. And by look, I mean, when you get down here, let's call it 67, you look for on a smaller time frame in an hour, let's say on a 5-minute chart, you look for sort of a type price action, almost like a hammock. Okay, and you can see, like I was showing you earlier, this is clearly where bears live. And there's no doubt about that. And then I go to the daily chart and I zoom in here. And once again, there's clearly bears here, clearly. So what for a bull, you're thinking down because of those bears and then up, or down and then up, or stop trading. And of course, we already know the bears have been patient. They had to wait a day or so, and they want to drop it like it's hot now. And they have every right to. So what you want to do as a bull is what we used to do at NASA. And I was going to clear this out. I don't want to lose that this analysis. But in NASA, if you want to hit this planet and you're on Earth and you shoot your rocket out into space, right? And then you slingshot. Now, the interesting thing is if this is far away, what you do is you add another planet here. If it's a big one, like, okay? And what happens is you throw it out here, and then the gravity sucks this one in, and you wind it up, and you shoot it this way. And it'll actually speed up, okay? You can change the direction and the rate of which it's traveling through a slingshot. Okay? And so what you're doing as a bull here is you're letting bears sell, you're getting out of the way, so that you can buy it. It's like a slingshot in the sense of you need their selling momentum to throw you this way. So what the pattern you're getting is this. Mwah! Okay? Okay, so what's the basis of your setup here? That 65 or 66, if you want to call it that, is a bottom. And you understand that oil's come off. That's fine. You understand that. But you've made a decision, maybe because of the China data I covered earlier, or maybe because of the seasonality, which I've covered earlier, or some other things, that you are essentially a bull on oil and you understand prices are low. That's good for you because you can buy it. If the S&P 500 fell 10% today, do you already know what you're going to buy? Do you guys think this way? Do you already know what you're going to do if the S&P 500 drops? Big flash crash, big bad day today. Okay? Well, that means you have an opinion. You believe the stock market's going to go up. So, do you have an opinion here? So, once again, look at the EIA, IEA, and OPEC sites, okay? Analyze Russia and China and make a decision up or down by the end of the year. If you think there's going to be too much supply, in fact, you should probably look at the USA Okay? If frackers start fracking, okay, all that kind of stuff, and you believe supply is going to be, there's going to be too much supply, then prices are going to fall. Where? 60? I already have it marked. It's probably more like 58, honestly. Okay? So you have one of two opinions. You'd buy it at 65. Maybe you'd buy it down at 60 or 58. Okay? Cool. Why do you have this opinion? You did the research. And now the cool thing is you're setting it up here. And because of that, you know when you're right, but you also know when you're wrong. And if you're wrong, you back off. Cool. Whatever. Okay, let's move to the next. Now I would like to do gold. Okay. So what do you think? What's going on here? Okay. What's going on here? Well, one question. I think Bloomberg was calling this a flash crash yesterday. I'm just wondering if central banks are dumping their gold. And I think that'd be interesting because that would mean they're behaving the exact opposite that they behaved back when COVID hit them hard, which means places like India, okay, is selling. Okay, so anyways, we'd have to pay attention and see if you understand why. By the way, you see this that I have set up? Of course, it didn't work, but I have it set up. What is that called? Hammock. Okay, so anyways, look at this. Hammock. Okay, what is this? Hammock. Happens a lot, yo. Anyways, on all time frames. But anyways, so gold. Gold. Why do you buy gold? To hedge your portfolio against inflation. That's the standard. You know, that's what your grandpa did. That's what your dad did. Well, one issue is it's priced in dollars, so I never really, okay. But whatever, they're saying this is the anti-dollar. Is it behaving that way? Well, right now it's behaving like a tool that central banks use, and that's what what Bloomberg this morning, they were talking about gold specifically, and how it hasn't performed well over the long period of time, and they're wondering if it was broken down about correlation and this, that, and the other thing. And they're just missing the fact that, you know, central banks are involved. They're just missing that entire point. Okay? Okay? So I think it's interesting that this move here was central banks. And we played that one beautifully. So I wonder what's going on here. Well, remember, a bank doesn't play the technicals, but other market participants do. And so they do see this bottom. So a bear is going to sell it again, okay, and try for a lower low. And a bull is going to try to play it like short-term range, longer-term range. And do you think we're going to go back to 2000? I don't know. I think the other thing going on is gold wasn't an inflation hedge. I think that's a misnomer, or maybe that is literally what your grandpa did. But I think more recently, in the last 20 years or so, as long as I've been trading, it's not necessarily an inflation hedge, because every year we had less inflation, but more of a correlation trade where they were trying, gold might have behaved just differently than many other asset classes that everyone else was trading. So, you know, if you're trading, you know, the stock market long and the bond market short, Well, they're related. They're inversely correlated, but you would always be buying stocks and always selling bonds or vice versa. We've seen since quantitative easing, bonds and the stock market are positively correlated, which is really strange. But nonetheless, you always needed something that behaved at least differently. Not necessarily negatively, because a negative correlation very often is just a positive correlation in reverse. So what you want is something that's just not correlated. So you might invest into real estate or art. I know a guy that runs a hedge fund out of Hong Kong, and all they do is buy rare whiskey. No joke. He has a whiskey hedge fund. So that might be non-correlated. Another way for you to stuff, $1 million away in vintage whiskey. Now, so gold might have been something like that. Maybe just a slightly different correlation or whatnot, or non-correlation. But I think BTC is also taking that role. Okay? But gold is great in the sense that if a central bank puts gold in its vault, it converts cash into, right? Meaning you used to have 2 billion in cash, okay? But now you have what? 1 billion in cash and 1 billion in gold on your asset side, right? Assets. So nothing's actually changed. You have the same amount of assets. But here's the interesting thing. If you bought gold, you got rid of cash. That $1 billion of cash is now in the interbanking system, and you've weakened your currency. You have the same amount of assets at your central bank. Your balance sheet is still balanced, and it's still the same amount. The only thing is you've weakened your currency. Okay? And now it's interesting where maybe if you're a central bank and you want to strengthen your currency, right, or lower inflation is the other way of looking at it, then you're like, you know what? Sell our gold, take back our cash, and then you strengthen the currency. And now you have no gold in your vault, but now you're back to 2 billion. What changed at your central bank? Nothing. But you've now strengthened your currency, and a stronger currency will lower inflation. Oh, well, maybe some of this is what's going on. And as currency traders, we get to participate indirectly. You don't have to trade this gold market. You could, of course. But you could certainly play the game. Okay? You could be buying Indian rupee. Oops, don't click that button. Or you could be selling Indian rupee. Okay? Cool. So anyways, just another thing. Let's do some Bitcoin now, if you don't mind. I have this marked out here as a buy zone after the break, and she never even came back yet. Okay? Mohammed says, well, maybe money will move from gold to bonds to crypto. Well, let's talk about that just briefly. I was talking about central banks buying and selling gold to impact the value of their currency. Not really. They'll never admit to that, but to address inflation. But I didn't say central banks are going to sell their gold, buy more bonds. Well, they're already buying bonds. Or buy crypto. Wait, what? Your central bank's going to be buying Ethereum? I don't know about that. So don't take it too far. I'm talking about central banks. And remember, central banks, directly or indirectly, influence the value of a currency through the direction of the flow of currency. And as a currency trader, you need to understand that and get on it, trade it, make money, so that you can buy your pretty friend some gold. Okay? So let's take a look at Bitcoin from a bullish point of view. Okay, we can go day trading bullish, drop into a 4-hour, and see that it is stepping up, but much hotter than day traders. Okay, this is the daily buy zone. Okay, this was a buy zone. Here's the double bottom. Here's the higher high, higher low, hammock. Okay, hey, even on Bitcoin. But here's the thing. Here's the buy zone, never got it. I mean, it kind of did, but not really. Here you had about 1 minute of the day to catch it, which I doubt is happening, right? And now we're already at tomorrow's price. So for you to trade Bitcoin today in this consolidation, you have to trade tomorrow's trade. Meaning you have to buy it probably right now. I don't know if you have the right setup, but you would buy it now based on tomorrow's price. And if you didn't buy it now and you didn't buy it yesterday, then I think you should just walk. Because clearly you're not paying enough attention, you don't have enough conviction, so you're not in the game. So I would say take a break, son, right? Take a knee. Bow out. Bow down, okay? Because someone on this already got this because they had it planned yesterday. They might have used a limit order. They got in, and now they're still in, and this is still a plan. And here's the thing. If they planned this yesterday, what are they doing today? They're planning tomorrow, today, and they're like, well, this is my price, but I didn't get follow through here, so I may choose to not add another lot to something that hasn't worked out already. Where you might be coming in, you're like, I'm not paying attention to this, I'm not paying attention to this, I'm not paying attention to this. But now, what? You got something on Reddit that says you should do something? You're like, dude, stop being pathetic. Okay? Do the work. All right. Okay? Cool. Ethereum trying to lead the way here. Okay, what was the day trade? You mean yesterday when we were here and I drew this? Do you guys remember? You see that up arrow I drew? Oh, look. There it is. Nice. Okay, look at. Huh? Look at that. Nice. Oh God, as Kanye would say. Oh God. Okay, put suicide doors on the tour bus. Nice. Cool. Love it. I love trading. Trading's awesome, man. Trading's awesome. Nat Gas kicking off the 4.0 M2 target, what? 4.4? 4.3? 4.2? 4.3? Oh, God. Yeah, nice, huh? We call this Fibonacci. Little day trade on Nat Gas. I know you're not trading it, so let's not make a big stink. All right, right? You guys want to do dollar? Yeah, let's do some dollar. Firstly, let me do a poll. All right, let's do a poll. Let's see. Let's do some opinions here. Let's get some votes. Are you a dollar bull or a bear today? Let's get some votes in. Okay, 26 votes. Could I get some more, please? 39 votes. Can we get some more, please? 45 votes. Can we get more, please? All right, we have more than 50, so let's take a look. And here's the interesting thing. I've been doing this a long time, almost 20 years. I've been covering the live foreign exchange market. And when I ask people, it almost always is something like this. 50, by the way, statistically, you have to have a sample size greater of 30. So this is why we have a sample size of almost 60 people. So it's a valid sample size with probably a normal distribution. And according to this research, it's a normal market. Half of you are bullish, half of you are bearish. And I want you to really, truly understand this. Forex is not a zero-sum game. It's a dance between the bulls and the bears. You're working together. So if you're not getting the financial results you expected as a currency trader, it's because you're trying to fight. You're stepping on everyone's toes and you're dancing to a different beat. It's hard to watch and it's embarrassing, but it's also very uncomfortable for everybody involved. And they would rather you just leave. Get off the dance floor, son. Okay? Instead, I want you to realize that we're working together. That's what flow is. I want you to understand that even in a bearish downtrend, let's do it like this. Okay? Even in a downtrend, okay? What does this mean? Well, let's say in periods of down, it moves 99 pips. Down, 99 pips. Down, 99 pips. Down, 99 pips. Okay? Let's say, right? Every day it's a downtrend. So there's your average daily range, or your average true range is about 100 pips. But there's always a pullback. Look at your daily chart. How many candles have wicks? There's always price action. Okay, there's always pullbacks. And in fact, I've taught you in the day trading course at FX Bootcamp that the money is made in the wicks. Okay? And you'll see that very often, this might be 40 pips. This might be 50 pips. This might be 40 pips. This could be 60 pips. All of which are basically Fibonacci. Okay? 382, 50%, 618. But nonetheless, down, down, down. Okay? And if you're not getting the results you want, it's because you're selling here low, getting caught into the pullback, and giving up. Then the next day you sell low, then you suffer the pullback, and then you get out. And down here you sell late, you suffer the pullback, and you never participate. You're not participating. You're getting trampled on, and you're stepping on other people's toes. And you're not helping, really. What you're doing is those that sold earlier are getting out of a trade and giving it to you instead. You come in and bought it from them. Well, they're taking profits so they could put gas in the Lambo. Okay? You're jumping in now because you're like, oh man, look at that. It's falling. I think I'll sell late. Good. You're giving gas money to the Lambo. Gas money. Which turns out to maybe a loss to you, maybe a break even. But you're not getting the results you want because you're not in the moves properly. You're not deciding if you're a bull or a bear. You let the market show you that it's bearish, and then you jump in late and you sell low. And then you get knocked out on the pullback over and over and over again. If you were just bearish, you would just do something completely different. And you'd say, well, yesterday was bearish. So, right? So today I want to be bearish, but I don't know what's what, when. Then you drop into the small time frame and you see green, red, sell. Okay? Over here, you want to sell, but you don't know when. Asia, maybe. London Open, maybe. Green, red, sell. Okay? We call that day trading. But if you're, right, if you're not getting the results, it's because you're not a market participant. But, right? Even the bulls, guys, even the bulls, the ones that are wrong, see the profit taking and they're trading this way. They buy a reversal at support. Now, the market hasn't reversed. The trend hasn't reversed. The bulls are trying to get it to reverse, but they're maybe fighting a losing battle. Okay? And what are they doing? Well, if you're getting knocked out for a loss, you're paying them too. See, you bought your position from a winning trader who already sold hours and hours and days before you. So now you want to sell, so they sell it to you. They made money. Then what? You hold the position for several hours, maybe a day or so, and you just can't take it, the pain, so you take a loss. And what are you doing? You're selling a position to a new bear. Or you're giving your profit, your loss is the bullish profit. So what happened was you gave money to the bears, and then you gave money to the bulls, and you lost. But you paid out everybody else. So what I'm suggesting is maybe you're not doing it right. Maybe you're not even thinking about it right. And I think if you can make a change, right? If you can look at your, right? I'm talking about the man in the mirror. I'm asking him to change his ways. If you want to make a world a better place, take a look at yourself and make a change. Yeah, that just happened. All right, so anyways, that's how you should be thinking about things. Okay, great. So what does this say? Bullish? No. Okay. Okay. Do you think these are going to, right? Raymond says, yeah, one of my rules is buying or selling as close to the open daily price as possible. I don't know if that's that necessary, but let's just keep it basic, right, Raymond? It's you buy low or you sell high. And if you're day trading, dude, you have to be using Fibonacci levels or pivot point levels, which are essentially one and the same. Like so many people get so focused on a rules-based system. Step 1, step 2, step 3, step 4, step 5, step 6. Instead of going, I should sell high. So what should I do today? Like, why don't you just do that? Like, why do you need seven steps? Why do you need 7 steps? Why can't you just make a decision? Are you going to buy it today or sell it today? I don't know. Don't trade. It's okay, by the way, to say, I don't know. Why don't you wait until it's obvious and you're like, I totally know what to do now. Good. Okay, for example. Okay, basic price action. If you don't know what to do here, then don't do it. Basic price action. Look at basic. This is covered in the price action course 1,000 times over. Okay? If you don't know what to do, then don't do it. But why do you need 7 steps? Why can't you just sell it? Like, that's the part. I'm like, why don't you just sell it on resistance? What if I lose money? Then take a loss and then back off. Okay? Alex says, high is relative. Yeah, that is true. And that's where we would, in situations of agreement or disagreement, Alex, it typically comes down to the time frame. Okay? But I think most people trade with an hourly chart, for example. And we might disagree on the long run of up versus down. Okay? That's where we would, by the end of the year, do you think pound dollar will be up or do you think pound dollar will be down? We may disagree with that fundamentally. Cool. And therefore, that determines whether we're bulls or bears. And it doesn't even matter. Ultimately, we will probably both make money. And if you're more right than I am, Alex, meaning you're a bear and I'm a bull, and the market ends up being bearish by the end of the year, the price is lower, you're going to have far more opportunities to sell than I will have to buy. And you will do better than me. But in the situations in which I buy, I make some money. You'll just make more money because your analysis was more correct than mine. Cool. I'm trying to address where people are just not making decisions. So I think we should all agree that this made a lower low. Cool. Is that bullish? No. Is that bearish? Yep. You sell that. Okay? Then when you're down here, what do? You take this level, you drag it across, and that's your new projected sell zone. So you sold that. Cool. You don't need 6 reasons. Okay? And here's what we do now. Okay? Here's what we do now. We mark this. If this makes a lower low, meaning 2 hours from now we're down here. Actually, it'd be more than that, right? At the end of the day, if we're up here, what are we going to try to do tomorrow? We're going to try to sell here. It might be a little, right? Let me define this. It might be a little lower than that. It might be exactly that. It might be a little higher than that. This is why we do things like Fibonacci, where we measure this high to this low, and we measure 382, 50%, 618. Okay, why do I need a 6-step process tomorrow to sell this if I already know I'm going to sell it if we're down here? See, it's a different questioning process, and I'm trying to teach you guys that. When we're down here, I'm making a decision for here. So So if we do come down here, and then tomorrow I do find myself somewhere around here, well, I don't need 7 reasons. Okay? But it's often people are here making a decision tomorrow and they're like, what should I do? What should I do? What should I do? And then they sell way down here. And it's too late because that's the equivalent of selling down here. And then at the end of the day, you're knocked out at break even because what it did was you were profitable for an hour and then it came back and you were hoping, and now you're out. And I'm like, thank you. And then I take it down. Now, your big argument, Wayne, would be something like, Wayne, how did you know it wasn't going to go higher than this yellow area? Well, I don't. That's where you lose money. You were wrong. So make sure if you lose, you can afford it. Okay. Now, JK Markets brings up the next point. Well, the point I've already made, but let's kind of right? JK Markets will say, whoa, wait. On a higher time frame, this is clearly up. Well, I'm only discussing what we see now from a bearish point of view. Now, a bull might say, whoa. Okay, global macroeconomics indicate that by the end of the year, dollar's going to be weakened. Besides that, at the Bank of England, there's a hawkish tone at the bank, and that they're probably going to have to remove emergency measures and start addressing things like inflation because the debt level in foreign currency is quite high. And that there's been a recovery and an expected recovery from COVID. So the policies at the Bank of England will change, which will probably strengthen the Great British Pound. At the same time, the dollar is more likely to weaken. So Wayne, what are you talking about bearish? Look, this is price action, yo. There's no fundamentals behind price action. Okay? This is just what's happening today. Make money today. But if you're like, whoa, JK Market says, but by the end of the year, this will be up. Cool. Then why don't you, on this time frame, wait for it, price action that develops a hammock. Well, what will that mean? Then on this time frame, it's now technically bullish, and you're a long-term bull. Now it's time for you to dance, JK. Okay? This tune's for you. Boom, 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 boom. Can't touch it. Boom, boom. And you're out there, whoa. Right? And you got it going on. You're doing the side shuffle and stuff like that. Huh? That's you, right, JK? So you wait. And that's what I mean by a symbiotic dance. Down, 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 up, sell, down, 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 up, sell, down, 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 up, sell, down, down, up, down, buy. Up, down, buy. But you got to know how to keep your powder dry so that when the market is good, you fire for effect. And when the market is bad or mediocre, you don't trade that much, guys. You don't make the same number of trades every single day. If you do, you're not a very good analyst. And you're like, Wayne, how dare you say that to me? I've been doing this over 5 years. I'm like, dude, you're not very good. Why do you have so much pride mixed up with this? I'd rather you say, oh, well, I got room for improvement. Cool. Then let's deal with that. Okay? Look, 20 years later, I'm still spending more money than most people make on education. Right? Most people's annual income I still spend on education. Okay? So, I don't know everything. I'm not even close to that. I'm still pushing to learn. But for that, you need to remove sort of pride. I mean, I have pride. Like, I don't think pride is a sin. But if it blocks you, then it is a sin. I think there should be a different word than pride. Okay? Right on, grind. You know what? I woke up happy today. Is it ego? You know, because that's a tough one too, right? Pride, I don't think pride is a sin. I know it's one of the 7 deadly sins. But also ego, well, don't you... I mean, I guess we never discuss it, but a lot of people have a negative ego as well as a positive ego. So I think there's a degree to ego. But also, don't we need confidence as a trader? Like I've asked people before, right? Do you think you need confidence? to be a successful currency trader? And everybody always says yes. You cannot be a successful trader and lack confidence, right? So there's this sort of entrepreneurial spirit where you say, look, I understand 95% of people fail at this, but not me. See, an entrepreneur thinks that way. Oh, there's 1,000,000 to 1 odds that you're going to be successful. All right, let's do it. Okay? Because those are the types that start new technologies, start new businesses, start new services, go out and create the future instead of working for somebody that, probably is still stuck in the past. And now your job is to sit at a desk and keep doing some obsolete, stupid thing. Okay? There's something about us that says I can do what's nearly impossible statistically. Because you're good enough, you're smart enough, and gosh darn it, people like you. Great. So we have to have a level of confidence. Is it ego? Yeah. But is that bad? No. Is it arrogance? Well, people tell me all the time that I'm an arrogant prick. I try not to be, but I think I'm misunderstood because I do have confidence. Okay? I do have confidence, but very often I can back it up. I've done the work. I have a very, very, very strong opinion. And a lot of people don't like opinions, so they're like, what an arrogant prick. I'm like, dude, I have an opinion, and I'm being very clear in sharing what my opinion is. But I didn't ask your opinion. Well, then why are we talking? Well, I want to tell you my opinion. Well, I'm not interested in your opinion. And maybe that's why I'm an arrogant prick, right? I'm like, dude, I'm trading my opinion, whatever, right? I'll see you in the markets. But so, I don't know. So these things are difficult, right? But Morena has helped me over the years. She's like, Wayne, you come across like an arrogant prick. I'm like, I'm not trying to be. So I try to adjust and I try to learn, and I told her by email, I'm like, you're right, and I'm sorry, and I'm trying to improve. And so it's a fine line. How do you come across like, I have an opinion, I'm going to share this with you, and I'm going to be clear, and I'm going to be direct, but then not step on toes, right? So, hey man, it's a difficult gig. What can I tell you? Cool. So let's look at this. Is the market bullish? No. Do I want to be a bull? Yes. How am I going to deal with this? Wait. Okay. First of all, do I have a decent price? Yeah, I do. Oh, and by the way, right? Thank you to Morena. And I hope I'm not an arrogant prick. Okay. All right. All right. So here we are. All right. So what do I want here? I want this to go up. Do I have the right price? Yes. I'm trying to find a decent time frame to look at this. Do I have the right price? Yes, I have permission to engage. I think down here, like, I don't know, 17. Excuse me. Somewhere around here is fine. So I have the right price. Does anybody remember what I said I wanted to do with the Euro USD in January? How many people here know or was there when I told you what I wanted to do with the Euro USD back in January? And let me be more specific. how many people here remember in January what I wanted the euro dollar to do in August? So 8 months ago, August, how many people here clearly heard me say what my opinion is for the euro dollar in the month of August, 8 months in advance? I'm not talking about January. I'm not talking about October. How many people in January clearly understood my opinion of what I was looking to do this August? Now that's a hell of an ego. You're telling me I told you 8 months ago what I intend to do with the euro dollar in August. That's ridiculous, but it's true. Now let me be even more clear. When did I want to be ready, willing, and able to carry that out? What week of August did I say I want to be ready, willing, and able to carry out that strategy? The third week of August? You mean next week? You mean Monday? You mean Monday? Well, that's ridiculous. Because right now we're at the projected low for August. And I'm a bull. What? We are at the projected low for August, and I'm a bull. And I told you 8 months ago that Monday of next week, I want to be ready, willing, and able. That doesn't mean I'll buy it next week, but I'm ready, willing, and able to buy it on Monday, and we're at the projected low for the month. That's a hell of a coincidence. Could I get a like for that? Can I fish for a like? That 8 months in advance, we're predicting a change in the market, and we are currently at the most logical level of support there possibly is for the month. And we're timing it now almost to the day. Almost to the day, 8 months in advance. Ego. What an arrogant prick. Well, here's the humbling part of it. Maybe it's not random. Maybe it's not a guess. Maybe there's a repeatable pattern here that can be learned and maybe used in your analysis. Oliver says, I took the 4-hour 5. Okay, ready, willing, and able doesn't mean buy, even though I am a buyer. So what have I said about 10 times today? Wouldn't it be cool to see something like this? Well, that might be Wednesday of next week. Here's the other thing I told you, just to be clear. let's go out daily. I would not be shocked in the least, and I am fully emotionally prepared for this to also be the third week of September. I'm fully prepared for a move like this. Okay? So what would you do if that occurred? Well, why don't you think about it now? Okay? So the thing is, we were on this like stink on a pig. Okay? This is the projection of when you should probably exit the market, because I was clear. I don't know what's going to happen in summer. And we knew this was the key turning point, the Fed meeting. Okay? And now here we are, 8 months ago, saying, well, somewhere in here is a good time for a potential change in the marketplace, just like this was. Doesn't mean it will happen? No. But it's going to be a lot easier if I'm ready, willing, and able to execute, because I am actively and consciously observing what's happening. And I'm observing through a filter. Not just a microscope or a magnifying glass. Okay? If you drop into a 15-minute chart from a daily chart, that's really good. But if you don't know what you're looking for, then you don't know, you'll never find anything. You'll be looking for any pattern. Well, what I would do if I were me is, if we were at support and I was looking on with a magnifying glass, looking for reversal patterns, then I might just take one or two or three and say, this might be it. This might be the low of 2021. And if it is, I'm going to make money. And if it doesn't, I better keep my powder dry. Diego says, example, yesterday you showed us the import, by the way, the most recent import data from China and why the Aussie should be strong. And today it is already one of the currencies gaining strength. Yeah, there you go. You're welcome. Okay. So Thiago says, blah, 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 blah. Is there any analysis specific to the data on that date? No. But I have two PhDs working for me right now. One of them is taking his team through, and I'm doing some modeling based on some of the stuff I've learned at the algorithmic trading program. So I'm using my Oxford brain. I know, arrogant prick, right? And I'm going to find confirm or deny patterns that I assume are in the data, but we're going to go back many, 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 many years in the data, normalize the distribution, index everything, and then seasonally adjust, looking for patterns. And therefore, at least on a proprietary level, I will have some alpha. Okay? Okay? See? That's the great thing about money. You're like, you don't want that? You just sprinkle some money on it. Guys, if you want to learn how to trade, if you want to learn fundamental analysis, if you want to learn macroeconomics, if you want to learn central banking policy, monetary policy and theory, if you want to learn technical analysis, how to day trade, how to swing trade, how to position trade, how to carry trade, how to use MT4, if you want to know how to trade the news, if you want to know all your technical indicators, if you want to know trader psychology, dude, just pay money. fxbootcamp.com, just pay the money. Get the knowledge. Okay? Pay the money. Get going. Okay? You're running out of time. The one thing you don't have time is time. You can make money, but you can't make time. Hurry up. Let's go. We're going into peak season, right? We're going into peak season now. Right? If you haven't spent time educating yourself over the summer, you've wasted the summer. Okay? I did 12 weeks of formal education this summer. Okay? I would say more than 12 hours of every weekend I'm studying. Okay? So anyways, let's go. Let's get going. Yeah, I saw that, Joshua. It's going to be awesome. Peter, special drawing by whom? Okay. CAD very strong. Cool. So yes, tomorrow I will do my webinar. I might start it early. I probably will start it early. And then I'm flying to New York City. That's going to be nice. No, I know, but whom is drawing from the IMF? Okay. Who's using the SDR? Usually it's third world emerging market countries, so I don't know if it matters at all. Okay. IMF generally puts money into domestic economies. And on the short run, that wouldn't really impact Forex. In the long run, it would. So like when you're doing something like, I don't know, what should we do? Hang on. How we say in English. Oops, delete. Oh, that's funny. That's interesting. That's on my blank chart. Guess I need to get rid of that. And I guess while I'm at it, properties. I might as well just put that white just for fun. But it's this one I gotta change. That's interesting. All right, cool. All right. So what were we talking about? The IMF. And on the short run, what would we use for this? Short run Phillips curve, I guess, right? Short run Phillips curve, okay, versus a long run. That's supposed to be, let's undo that. See, on the short run, this is employment and this is inflation, okay? What they're going to do in the short run is shift the short run curve left or right, whatever, mostly right, and try to, improve employment. So many third world countries lack jobs, so they want to increase jobs and whatever. But I was going to shift another curve, but I think I'm making this too complicated. But ultimately, it's all domestic, and you'll get double shifts, and then on the long run, okay, you'll get this, which makes your economy more productive, and when your productivity increases. So productivity, you would measure that like Y. So when productivity goes up, okay, you get more consumption, more investment, okay, your government's richer, can spend more, but then you also have excess. Okay? You have excess because your productivity has gone up so much, and you start selling some of your products to foreigners. But it takes a long time to shift the long run Phillips curve. And on the short run, what you're doing is you're shifting demand, increasing supply, shifting demand, increasing supply, shifting demand, increasing supply. And only slowly are you then changing the long run. And then it's the change in the long run that gives you the excess, because you're now so productive that you have to sell outside your borders. And when that happens, now that will impact, that would impact Forex. So domestically, these things shifting on the short run will be very important to domestic economy. But South Africa going from 20% unemployment to only 19 or to 17% unemployment, it's not really going to impact, the sort of how they their foreign exchange, So another thing to then look at, and I do this in the macroeconomics course, where you're trying to look at productivity and you're trying to shift productivity. And you do that through a savings rate and a depreciation rate. Wait, I got those backwards, I think. But anyways, what you're ultimately trying to do is shift these curves and then drag, wrong one. And then shift from here to here, but that takes a long time. Okay, because you're shifting to the right and up. You have more and you're making more. But that solo growth model will take a very long time. So IMF is going to, it's slow. Okay, it's slow, but as a percentage change in growth, it'll be fast, because those types of economies that the IMF is trying to help with, they're catch-up economies. There's difference between mature growth and catch-up growth, Morena says our unemployment rate is close to 40%. It's mind-boggling, isn't it? So, I think right away, Marina, if you have 40% unemployment, then the cost of labor is low. The cost of labor is low, and there's not much capital. And China was like that 25 years ago. And so what happened at first is the world invested into China to build capital. We literally built factories and said, well, labor is cheap in China, and it's because farmers are moving from the fields to the cities. They don't have a lot of education. and there's no factories. So let's focus on physical capital first. So we built factories, built machines, and China is just amazing, just how much it's changed. It's just unbelievable. So foreign direct investment went to China. We built factories and brought in machines. Okay. And meanwhile, then China was migrating its workers from the fields to the cities and then focused a lot on education. So now we're still investing into capital, but it's human capital versus physical capital. And all this investment went much faster than depreciation. And productivity went up, and we shifted that solo growth yield curve, as I just showed you. But it all started because the world wanted more stuff and they wanted it cheap. And that's why places like the United States just doesn't have inflation, not demand side inflation, okay? Because we found foreigners to make it cheaper so that Americans could buy more stuff for less money. And the standard of living went up in the United States, and everybody says that's bad. Yeah, but at the same time, the standard of living went up in China. Okay? And now you go to China, and it's a beautiful country with entrepreneurial, spirited people. And they make fantastic, high-end quality stuff, not just cheap Chinese junk like 25 years ago. Okay? Well, that's really cool. But then now when I think of South Africa and you got 40% unemployment and therefore, and not a lot of capital per worker, it's like, okay, well, therefore, why don't we just start doing stuff in South Africa? Why don't we start building a bunch of factories in South Africa? Right? The first thing you do is invest into physical capital. At the same time, the government should focus on investing into human capital. Over the next 25 years, we could increase the annual income of an average South African probably by 50 to 100%. Increase the life expectancy. Increase the average level of education. Decrease the amount of death in children in the first 3 years. It's all linked to productivity. But then Moreno's like, yeah, well, when foreigners invest into our country, the people of the country steal all the stuff. And therefore, investors are very reluctant. And that's incredibly unfortunate because I think the world would love to invest into South Africa. I think the world would love it. Yeah, it's really, really unfortunate. South Africa is in the way. It's terrible. But from a capitalist point of view, I'm like, oh my God, let's build some factories because how many people here think the United States is going to produce 50% more stuff in the next 25 years? I doubt it. We're growing at 2.2%. So maybe in 25 years, in 10 years or something. Okay? Or let's say 150% more in 25 years. Yeah, doubt it, because we're growing at 2.2% year over year, according to, long run GDP. But you could probably get South Africa to increase by at least 150%, but it could be 450% because they're starting at much lower base. There's right? You have labor plus capital, right? We have labor plus capital, okay? These are factors of production, okay? So what you want to do is improve labor through education. That's alpha. That's a fish, actually. And then alpha, right? Capital and labor. And you're going to get significantly improved productivity. Okay? But for this, you need money. And that's why I love capitalism, because capitalism will say, well, if I build a factory in South Africa, I have to give up some money. I need to build a factory. I need to buy some machines. And I got to hire a bunch of labor and then teach them how to work in our style, in my business style. So you want South African managers, South African workers, South African leadership, and bring sort of, I don't know if this was Amazon, like the Amazon culture to South African distribution centers or something, right? Okay, so you get all that. Why would they do that? Well, because they're expecting 2% growth in the United States, but potentially 20% growth in South Africa. And they're like, ooh, we want to chase this. But that's, again, a base effect because you're starting from such a low denominator. And this is from such a high denominator. It's very difficult to grow the United States more on the long run at 2%. But it's probably easy to grow South Africa at 20%. So a capitalist would say, well, I want 20% return annually on my money. Let's get going. Okay. So anyways, a capitalist doesn't care what religion you are, what color you are, how tall you are, what color of eyes you have. Nobody cares. Right? They're like, you either have, okay, what do you have? Labor, right? If you are a hard worker, right? With ideas, and right? And with a good culture, we call this institution actually. But if you have all of that, awesome. Okay? If you have good ideas and a positive attitude and a good outlook and you're hardworking, that's all entrepreneurialism cares about. That's all that capitalism cares about. Hey, you can make us money? Good, you're hired. Oh, but the other people wouldn't hire me because I have the wrong color eyes. We don't care. Okay? That's what I like about capitalism and entrepreneurialism. Pure capitalism, pure entrepreneurialism doesn't care about all this other distortions. You're too old, you're too young, you're too tall, you're too short. You pray to the wrong version of God. Your God's not the right God, mine's the right God. My God hates your God. Like, entrepreneurialism doesn't care about that. Let's produce some amazing value through better products and services so that when we're productive together and we trade together, everyone's better off. We'll make more love and less war. I'll see you tomorrow.